It's true. Mortgage fees for risky homebuyers with low credit scores are being subsidized by homebuyers with good credit scores. Freddie Mac, Fannie Mae. So guys, does that make sense? So again, I am super excited for anybody, everybody to actually purchase a home. Whether you have credit scores in the 600s or credit scores in the 700 or 800s, I feel that that's an American dream, to be able to purchase a home and be able to call it your home. But to now actually take and penalize those people who have actually worked maybe potentially harder to keep their payments on time, to build their credit, to subsidize for someone who might have not be, has worked as hard with their credit and is a little bit more risky. Does that make sense to you? It doesn't really make sense to me. So guys, this is just some information that I want to share with you, that it's happening here in May. That be prepared that if you are going to be purchasing a property and your credit scores are in the 700 range, you will be paying a higher percentage on some fees versus someone that's got in the 600 to 640 credit score.
Well, thank you, Emelia. Emelia Marini from American Pacific Mortgage is joining us today to talk about this LLPA and what that all means, and what her opinion is, and how that kind of helps or doesn't help. Or, again, as I mentioned, I'm super excited. I want homeownership for every single person. But Emelia, I mean, LLPA, it's like most people go, what is an LLPA? So why don't we start with that, please?
LLPA stands for loan level price adjustment. And these are basically costs that are passed on to borrowers in one form or another, basically through their interest rates. And so these loan level price adjustments are on conventional loans only. We're not talking about FHA loans or VA loans for this purpose. We're strictly talking about conventional loans. So basically, we have two twin towers of conventional loans, Fannie Mae and Freddie Mac, and they determine the rules. The Federal Housing Financing Agency determines these new costs that have been put into place. So basically what they've done is they've reallocated these loan level price adjustments, basically cost to borrowers. And what they've done is they've made pricing a little bit worse for borrowers who have higher credit scores, larger down payments. They've made pricing a little bit better for, they're really going for first-time homebuyer, low-income borrowers. They got a betterment in their pricing.
Somebody asked me the other day, is this affecting my current mortgage? And the answer is no. It's not only for new mortgages. Now, not every single mortgage you're going to obtain, which you just shared with us, that has these extra fees. So that's nice. So I guess your lender or you could talk to your client and you can address and kind of mold whatever fits best for you. If you want to use that product, great, you're going to have a little extra fees. But I do like it for the I guess the lower credit score borrowers, that they can actually go into one loan kind of product. But then if they switch over to this one, it really helps them a lot because they're able to qualify so much better. So I want them to understand that, yes, talk to your loan specialist and be able to work that out. But at the same time, I guess it's a win-win for them, and it's a little bit of a loss. But I just want people to understand that just because you have high credit doesn't mean now I can just let it go.
No, absolutely not. Do not let your credit scores go. That's going to do you harm all the way going forward. You absolutely don't want to do that. So, and there's a lot of pushback on these LLPAs. Right now, there's two bills making their way through Congress to remove them. I just heard that 27 states have written letters to President Biden and the agencies to try to get these removed. There's a lot of pushback because intuitively it seems a little bit difficult to charge somebody who has a better credit profile more in order to subsidize someone who has a little bit more challenged credit profile. So we're all for equal housing opportunity, getting first-time home buyers into loans, into homes. That is what our goal is. That's what Fannie Mae and Freddie Mac are trying to do. But they may have chosen a route that is a little bit challenging.
Again, I want to make sure it's very clear. I want everybody to have a home. It's just a little bit, just something that we just aren't used to hearing those words. We've been our whole entire lives, save, save, save. Don't miss a payment, build your credit, and you will be rewarded.
Yeah.
And now it's like, do I feel rewarded? You know, and the answer is really no. So, but I do agree that it's allowing some other individuals who have lower credit scores, who had some kind of, you know, situation or something that hurt their credit, and now they're building and it, you know, up their credit up, but it allows them to be able to purchase. So
let's talk a little bit about how these show up for the average borrower. So basically the way these work is that the interest rates just got a little bit more expensive for them. I read somewhere that the average cost to a new borrower is going to increase about $2,600. And basically what that means is to get the same interest rate that you would have gotten before, you have to pay an additional $2,600 in fees to get that same rate that you would have gotten before. Now, that's not across the board true for everybody. These loan level price adjustments are based on your loan amount and your credit profile. So if you're borrowing a lot less money, you won't feel this pain so much. If you have a very large loan, you know, it's going to be more pricey for you. So, you know, basically you can pay that extra money to get that rate back to where it was, but, you know, it is a hard cost that is being priced into loans today. So this went into effect May 1st, Fannie Mae, Freddie Mac. That means that loans delivered to them after May 1st have to have this in effect, which means lenders have been pricing this in for over a month now, so about 45 to 60 days. So any pricing that you've received from your lender in the last month already reflects these fees because we've been preparing for this.
good. That's good to know. Well, Emelia, thank you very much. Guys, anybody who wants to reach out, I'll put Emelia's and my information in. You can click on there, reach out to her. You can answer or ask her any other additional questions. Fabulous lender that's been doing real estate and lending for years and years in our county. I've used her many times. And so thank you, Emelia, so much for your time, and I appreciate it. And we'll talk soon, okay?
Always happy to help. Talk soon.
So this does not apply to all loans. You know, Freddie Mac, Fannie Mae, yes, but there are other options out there you may be able to explore to be able to avoid these higher fees. So if you're interested in that information, feel free to reach out and happy to connect.